What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible and also practical. So without further ado, let the intro roll and I will see you on the charts. The pair that I will be speaking about into this video is GBPUSD. Now, why do I want to speak about GBPUSD? Because it is one of the most traded pairs in the market and at the moment is very near to providing to us a good trading opportunity. So obviously I want to give you guys a full breakdown of the situation that we currently have on it to show you guys where we can be looking for the next potential opportunity on the pair. Now, as usual, I will be first covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are doing in the market. And by the end of the video, by using the combination of our technical analysis on the pair and our order flow analysis on the pair, we will be able to understand where we can be looking for the highest probability opportunity. Now, starting here from the monthly time frame, what we can see now here on the monthly, we can see that at the moment we're testing a quite strong supply area. In fact, what we can see is that exactly from this zone, this market had started all this move to the downside, confirming this area as very strong supply. And currently what we can see is that we are testing and rejecting this exact same supply area from which we definitely expected this rejection to start, and we can even expect more downside considering that here on the monthly time frame we have an impulse, but we never really had a nice correction. Specifically, if you have an impulse in the market and you want to measure the retracement, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that the market never retraced to the 0.32 of the Fibonacci taken on the monthly impulse. Now, the 0.32 is the first Fibonacci level at which you expect the market to provide a retracement to, meaning that here on the monthly there is definitely the possibility to see more downside for the market to go and test this area as a first retracement zone. So on the monthly, everything is aligning for a deeper move to the downside and deeper rejection away from the strong supply that we have already identified. Going down on the weekly time frame, what do we see? Now here on the weekly, we have quite interesting price action as well. In fact, here on the weekly, we can see how the market has just provided a nice impulse and correction. Now, as I said earlier, if you want to measure a correction, what you have to do is take your Fibonacci on the impulse. Now, in this case, the impulse is from this low to this high. And if we take our Fibonacci from this low to this high, what we can see is that we have a perfect 50% retracement lining up exactly at this area. And what we can also see if we look closer is that the market actually last week has closed below this 50%. Now, what does it mean that the market has closed below the 50%? It means that this 50% is now turned resistance. And considering that we have the 0.618 golden ratio at this area, there is definitely the possibility to see a deeper correction also here from a weekly perspective. Specifically, if we look at the structure of the market here on the weekly, we can see how the previous high is exactly this area here. In fact, from this zone, the market started this move to the downside, meaning that this is the previous resistance, which, now that the market has broken it to the upside, is turned support. So we can easily expect the market here to provide a deeper correction to go and test this previous resistance turn support from a weekly perspective before providing the continuation to the upside that we usually expect in this kind of situations. Going down on the daily time frame, what do we have? Now here on the daily, I had spoken about GBPUSD quite a few times in the past. I spoke about GBPUSD after this move to the upside when the market was here. I made a full breakdown explaining all the reasons for which, from this level, we expected the market to provide this move to the downside. And in fact, that is exactly what the market did. Then we had the creation of this M pattern, and when the market was here, I explained all the reasons for which we wanted to see the market create this move to the upside that the market has just created. And in fact, I will link both this previous analysis in description, so you can go and check them out for further reference and more free education. You find both these previous analysis linked in description. If you have any questions or requests for the next video, make sure you leave them down in the comment section. Also, make sure that you smash that like button and subscribe. However, at the moment, what do we have and how we can be looking for the next potential opportunity on it? Now, at the moment here on the daily, what we can see is that the market has provided a nice impulse and correction. Now, as we have seen already twice during this analysis, if you have an impulse and you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And if we do this, what we can see is that the market has just retraced exactly to the 50% of the Fibonacci taken on this impulse and has already started creating a rejection to the downside. Now, generally speaking, if we look at the structure of this market, we can see how the previous support and resistance is exactly this area here, and this holds for any market. If you want to identify the structure, you have to look at where is the last time that the market went to the opposite side. Now, in this case, the last time that the market went to the opposite side was from this low. The market created this move to the upside, meaning that this is the previous support, now term resistance. But since the 50% is lining up perfectly with this previous support term resistance, this actually means that this zone here is a strong confluence of resistance, which comes by the 50% with the previous support turned resistance. So there is definitely the possibility to see the market reject this confluence of resistance to the downside and complete this impulse correction and impulse pattern to the downside. Now, if we go and see what we have from an order flow perspective by checking the commitment of traders, which is what the non-commercials in the market are doing, so the biggest speculators in the market, so basically hedge funds. Now, if we check their orders, what we can see is that with the last report, hedge funds, yes, they have increased their net positioning from 30.9K to 36K. However, what we can see is that no longs were opened. There was no opening of longs, and the increase of the net positions simply comes from shorts getting closed. But since longs are not opened yet, this could easily mean that we can still expect a deeper correction from a monthly perspective before continuation to the upside, because we have a lot of liquidity placed below this low. This low here is probably a quite strong stop loss zone. Many people that are looking for longs have their stop losses below this lows. So this low here could easily be hunted in order to generate the liquidity that hedge funds actually need in order to create the rejection to the upside. And consider the fact that below this low, we also have the support that we have already identified on the weekly time frame. So the previous weekly high, which is resistance, which obviously now that the market has broken it to the upside is turned support, as I have already shown you previously when we were looking the weekly time frame. So there is definitely the possibility to see the pound create a move to the upside after the market has created the move to the downside, which would lead to hedge funds adding longs, because at that point we would have the liquidity in order for hedge funds to add the longs. So how we will be approaching this potential short-term shorting opportunity? Well, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best timeframe is the 4 hours. And obviously the other intraday timeframes. So with students, what we will be doing? Now with students, we will be monitoring price action from a 4-hour perspective inside of this area. And we will be waiting for the market to shift from a 4-hour bullish market as we have right now to a 4-hour bearish market. Now, until everything will remain bullish as it is right now and like this market will easily continue to the upside. So at the moment, we absolutely will not be looking for any kind of shorting opportunities because everything is still bullish. And until everything remains like this market will easily continue to the upside. However, if we will see this market shift from a 4-hour bullish market as we have right now to a 4-hour bearish market, at that point, we will be adding GBPUSD to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to complete this impulse correction, impulse pattern to the downside and create a lower low. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also let me know in the comment section below any pair that you would like me to break down in the next videos. And I will also leave a link to the mentorship program in the description. It's a very complete program. First, you get all the rules of my rule-based strategies, and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as answering any question that you have every single day. So it's a very complete program. I really suggest that you go and check it out, and I will see you in it.